Hello, my name is Lukman. So today, me and my group mates we're gonna present about a company called Bonia Corporation Berhad, and we're gonna talk about the financial analysis of this company. And by the end of our presentation, we're gonna talk about the recommendations and the conclusions to see whether this company is a good investment or not. Okay, so before we dive into details, we're going to talk about the company. We're going to talk about the overview of Bonia Corporation Berhad. Then we'll move on to talking about the five financial ratio analysis that we've analyzed, which are the liquidity ratio, the profitability ratio, the efficiency ratio, the shareholders investment ratio, as well as the long-term solvency ratio. So these five ratios are very crucial in the decision making for potential investors to analyze whether or not the company is healthy. And also by the end of this presentation, we'll conclude and talk about the talk and we'll recommend to the potential investors whether this company is good to invest in, and we'll also talk about like the pros and cons of this company. All right. So right now I'm going to introduce you to the company, Bonia Corporation Berhad. So the company was actually founded in 1974 and is a huge player in the fashion and lifestyle industry, specializing in creating high quality leather goods. So their product range in diverse, spanning handbags, wallets, belts, shoes, and various other accessories. So, what sets apart Bonia from its other competitors is its unwavering emphasis on craftsmanship as well as design innovation. In the market, Bonia wields significant relevance and influence. With with a global presence comprising over 1,100 sales outlets and 140 standalone boutiques, they've carved a remarkable footprint. Their brand portfolio includes Bonia, Brown Buffalo, Sambonia, Carlo Reno, and CR2. Not to mention, they've also secured other licenses for foreign brands like Santa Barbara Polo and Record Club, Valentino Rudi, Seville Row, and Renoma. Bonia's reputation precedes them as an industry leader. They are renowned for their commitment to producing fashionable and high quality leather goods. They've captured the hearts of customers who value both quality and style in their leather products and accessories. One of Bonia's remarkable strengths is their ability to adapt to ever changing fashion landscape and shifting customer preferences. This adaptability, combined with their dedication to crafting leather goods, inspire a lifestyle that deeply resonates with their customers. Okay, so that's all from my part. I'm gonna pass on the presentation to my other group member, Cliff.
Our analysis begins with profitability. We evaluate Bonia's net profit over the same 5 years period, which highlights the company's management ability to bring profit from its sales and whether operating and overhead costs are controlled. Well, in 2020, there was a significant decrease in Bonia's net profit margin. Now, why is that? Well, because the world faced an unusual challenges, as we all know, which is the COVID-19 pandemic. The pandemic disrupted the supply retail market, leading to production inefficiency and reduced consumer spendings. Yet, the subsequent year showed a remarkable resurgence. In 2020, Bonia's net profit margin skyrocketed to 12.19%, almost triple of that of the previous year. This resurgence demonstrates the company's exceptional ability to react to external challenges and swiftly adapt. In summary, Our analysis show a dynamic landscape in Bonia's profitability over 5 years with significant fluctuation but ultimately a remarkable rebound. It underscores Bonia's resilience, adaptability in the face of external challenges. Now, let's talk about liquidity. We examine Bonia's quick ratio, which measures its ability to meet short-term financial obligation. Over the same past 5 years, the quick ratio has fluctuated from the lowest point of 1.72 to the highest point of 2.27, indicating shift in the company's short-term liquidity. Notably, despite facing challenges, including a substantial decline in 2020, Bonia managed to enhance its quick ratio by 2022, demonstrating its capacity to proficiently manage its finances. Now let's begin in 2018. Bonia initiated the 5-year trend analysis with a whopping quick ratio of 2.27. This strong ratio signified that for every 1 ringgit of current liabilities, Bonia had 2.27 ringgit in current asset available to cover its short-term obligation. In 2020, Bonia's quick ratio dropped to 1.72 due to the pandemic once again, indicating a significant negative change of negative 0.28, equivalent to a negative 13.81% shift. This decrease suggests that Bonia faced difficulties in managing its short-term financial obligation during this turbulent period. However, in 2022 marked the end of the 5-year analysis, with Bonia's quick ratio at 2.16, reflecting a change of 0.12 corresponding to 6.12% shift. This indicates that Bonia continued to strengthen its short-term liquidity position, demonstrating its adaptability and effective financial management. Bonia's quick ratio trend analysis revealed a dynamic landscape in the company's liquidity position over 5 years. Despite facing challenges, including those posed by the pandemic, Bonia exhibits resilience and adaptability, ultimately strengthening its short-term financial position. Now, let's delve into the inventory turnover, which measures the efficiency of a company's inventory management. The graph explicitly illustrates Bonia Corporation Berhad's inventory turnover ratio over a 5-year timeline. This ratio evaluates the duration between the acquisition of inventory by the company and its subsequent sale. It's a key indicator of efficiency in inventory management. In 2020, Bonia experienced a decrease in its inventory turnover ratio, likely due to economic disruption caused by external factors. The ratio dipped to 3.33 from 4.06 in the previous year. This phenomenon was due to the emergence of the COVID-19 outbreak, which led to a global pandemic and lockdown. The outbreak had a profound impact on businesses and the global economy, including that of Malaysia, making it challenging for the company to sell off its inventories. The pandemic lasted for about 2 years, which explains why the inventory turnover ratio of Bonia decreased further in 2021. However, the inventory turnover ratio surged back up in 2020 as the economy slowly recovered. This comeback indicates improved efficiency in inventory management following a challenging period.
Thank you, Cliff. So, our analysis also delves into shareholders' investment. The price to earning ratio assesses the value of a company by comparing its current share price to its earning per share. It also assesses the relative worth of a company's shares in a comparable manner to other entities within the same industry. Bonia exhibited fluctuations over the 5 years. In 2020, it experienced a significant increase, reaching a peak of 38.87, primarily attributed to the economic challenges. Nevertheless, in 2022, the company's PE ratio dropped to 8.35 due to improved earnings, driven by the successful expansion of its e-commerce operation. Lastly, we assess Bonia's long-term solvency. The leverage ratio typically evaluates a company's capacity to fulfill its financial commitments. In the case of Bonia Corporation, we have observed fluctuation in their leverage ratio over the past 5 years. In 2018, Bonia displayed a moderate reliance on debt, with a leverage ratio of 1.59. Over the following years, we witnessed fluctuation. In 2019, a drop in ratio signaled a purposeful move, possibly reduce financial risk or strengthen equity. Subsequently, in 2020, there was a subtle uptick indicating potential expansion or investment endeavor. The years of 2021 and 2022 reveal a more noticeable trend of increasing reliance on debt, possibly for ambitious growth or capitalizing on opportunities. Bonia Corporation's trajectory in leverage ratio remained comparatively controlled. The fluctuation were not as pronounced as in other companies, suggesting a measured approach to balancing debt and equity. Bonia's leverage ratio reflect a strategic approach to debt management with an increasing focus on leveraging debt to potentially fuel growth and strategic ventures. Here are some of the key findings from the analysis. Bonia Corporation financial performance has seen substantial growth over the past 5 years. The company's net profit margin surged from 4.98% in 2021 to an impressive 12.19% in 2022, indicating effective operation and adaptability. Maintaining stable liquidity and efficient inventory turnover, Bonia remains reliable in meeting short-term obligations. In terms of long-term solvency, Bonia strikes a balance with a moderate level of debt utilization and a stable leverage ratio mitigating financial risk. Furthermore, the company's price-to-earning ratio exhibited fluctuation, with a notably attractive valuation in 2022, making it appealing to investors. In summary, Bonia Corporation's financial journey reflects a commitment to growth and financial stability. The consistent improvement in profitability, stable liquidity, efficient inventory management, prudent long-term solvency, and increased investor attractiveness highlight the company's effective financial management and its readiness to face changing market dynamics. Thank you for listening from our group, and I hope to see you again.